The people that don't like it are the ones that benefit from the old system. First of all, to understand that, you have to understand what money is. I would say to people getting into trading crypto or investing in crypto is what we believe in the financial markets.
Welcome to the Growth Concept Podcast. I'm your host, Kieran Upton, and if you're new here, I'm here to help you navigate the ever-changing world of personal growth for your progress. In today's episode, we're diving into the fascinating realm of cryptocurrencies and global finance. Joining me is Lan Reynolds, a financial expert with over 3 decades of experience in investment banking, foreign exchange markets, and so much more. Ian's deep knowledge and forward-thinking approach makes him the perfect guide to walk us through the complexities of Bitcoin and cryptocurrencies, as well as the blockchain technology. We'll discuss the foundations of crypto, exploring the groundbreaking potential of blockchain, as well as taking a close look on our currency and where it's heading, as well as the digital assets. Whether you're a crypto enthusiast or a curious newcomer or have no idea what any of this is, this episode is for you. Disclosure, this episode is only for educational and general purposes only. Nothing in this episode is classed as financial advice. If you are in need of assistance, please seek a licensed financial planner's advice tailored around your needs. Investments involve risk, including potential losses. With that out of the way, this episode has been an absolute game changer for me, and it's allowed me to see finance in a different lens. That's enough from me. Let's get into it. Enjoy.
My pleasure. Thanks for having me.
Ian, what is it you do, and what is your true mission in life as we speak?
Okay, so the first question I can answer, what my true mission is, I'll have a go at. What do I do? Currently, I'm an investor in startup tech companies normally, and I've been a tech founder, but my history is all in financial markets, making markets in currencies normally, which I did for 25 years in London before I moved to Australia. What my goal in life is to look after my 6 children and to provide for them and to live a gentle life, if that's possible. But also, part of my story is 15 years ago, I saw after the GFC that there is going to be a big smash up in money. Whether it's now or later, I don't know. But I just want to help people understand what they're going through, even if we all don't necessarily understand the outcome.
Yeah, GFC, that's the global financial crisis, right?
Yeah.
With all that being said, what sparked your interest in your finance and crypto journey?
Yeah, so the two things have a 30-year gap. So when I left university, I got a degree in physics, which I wasn't really very good at, to be honest. I hope my mum's not watching this. and you're thrown out into the world, and they asked me, I go to a job interview, they asked me to differentiate equations and integrate things and stuff like that. And I thought, do I really have to do this for the next 50 years or 40 years or whatever it is? It's crazy. And just to that time, I was lucky because Margaret Thatcher became the leader of the UK, Prime Minister of the UK. And in 1985, she deregulated the London financial markets. And this wave of capital came into London that changed things forever. And so part of that was everyone could get a mortgage, for example, and things were much more accessible and it wasn't the old boys network. Anyway, to cut a long story short, every American bank came in with a load of money that said anyone with a degree will hire you if you can drink beer. So it was, my fate was sealed then, I think.
How did the career start off in London? Are you originally from London?
Yep.
And how come you moved to Australia?
So I was a market maker in currencies for a long time. Then I was head of the proprietary desk at other different banks. I traded my own money on the London International Financial Futures floor. When you've been doing that for 20 years, you lose your mental flexibility, i.e. you decide what you think the market should do rather than the market telling you what it should do. Yeah. And we know that B is always correct. And I made some money. My wife, who worked at the bank with me, was from Brisbane. So I, rather than her, decided that we should come to live somewhere else in the sun and just do something different.
What's a market mover? You were saying that was your job role. Oh,
yeah,
market maker, yeah.
Yeah, a market maker is someone that makes a price rather than takes a price. So if you go onto an
Okay.
exchange, you take the price because it's there. I make a two-way price, so it's a institutional wholesale pricing, so a buy and a sell for people
Okay.
who don't know what they want to do in any amount at any time of the day or night.
Wow.
So when you go, I don't know, dollar Canada is 127.2025. That's my price in at least $5 million. And pretty much any customer of the bank I work for at the time or another player in the market can access that price, but only wholesale customers. So at one time, there's probably 5 people in the entire world that dictate the price by, you could say, making it up. But when you make it up, you're quickly disproved of your concept that is the price if you're wrong. So there's very, very few people that do it. It's highly stressful. Fantastic thing to do while you're young, but you can't do it for too long because you think you're bigger than the market and you're definitely not.
Yeah, I feel that. And you did that in London?
Yep.
Did you do that in Australia at all?
No, there's no such thing here in Australia.
Yeah,
Some
right,
banks
okay.
in Sydney might disagree with me, but really there's not. All the
sure.
currency markets, which is $5 trillion a day, goes through London.
Wow. Must have been a very stressful role, like you were saying.
Yeah, no, it is full on, but you're lucky that you get all the orders that your bank has. So you have some leeway there. So you know pretty much where the price might be to start with because it's between these two levels. And you have 5 other people in the room wanting to help you when you need help. Boy, do you need help. But you get to hand it over to the next time zone. So in London, I would hand it over to Toronto if it was a Canadian dollar at 2.30 or 3.30 or something like that. So I don't have to deal with it 24/7. But like Toronto has to pick up the mess I'm in, when I hand over, I have to pick up the mess that Tokyo hands me. So it's a global book. I don't particularly own it, apart from my P&L when I'm in charge of it.
Let's talk crypto now. It's a fairly new currency. I was looking at stats on how many people actually know what crypto is. Turns out only 12.5% people globally know what crypto is, which that number is significant less compared to 50% of people know what a share is. So let's break it down. What exactly is cryptocurrency and how does it differ from the traditional currencies?
So this is a very big topic, but the view from the moon is that, first of all, to understand that, you have to understand what money is. So money is a store of value, a unit of measure, and a medium of exchange. So you could take gold anywhere in the world and you could exchange it for a bottle of whiskey like in the old westerns. Like you scrape off some of your nugget and the barman slides a bottle of whiskey down the bar to you. So you could say you could take that and do that anywhere. A currency isn't like that because it's located geographically and centralized around your government. And that may or may not be backed by anything. Cryptocurrency is something that is intended for you to own yourself, i.e. private money. Hence the difference. Whether it is or not is a different question. There's been lots of e-cash sort of things that was developed in the 90s, which got crushed by the US government. And Bitcoin emerged somehow from that after the GFC in 2009 to be something that replaced what was clearly a fiat system that was going bust. So what is cryptocurrency? It's private money. It's native digitally to the internet, but it's meant to be your money. If you have it, whatever that means, you own it. It's meant to be a bearer instrument.
Okay, so it's off the traditional currency. It's on its own ledger, if that makes sense.
That's right. So it's on its own ledger. So you have to exchange from fiat currency for a cryptocurrency. And at that point, to some extent, it disappears until it gets cashed back into some fiat currency. And all the world's governments have been trying to close down that window because, of course, they want to tax those transactions. And they hate private money.
Why do you think that whole process started to emerge from, obviously, for so long being on the traditional currency system, and now we're shifting off the system onto a more more of a digital currency. Why do you think that's the case?
Well, that the whole history of money and currency has been a punch up forever anyway. So there's no question at all that it's anyone thinking it's going to a better way of being, because it is going to a better way of being, because it's meant to be, in the very least, transparent. What the government doesn't like is that it's supposedly anonymous, but it's actually de-anonymized rather than being anonymous. If you look at the history of money, in 1971, for example, just to go back to one of the later incidents, the US dollar was backed by gold, i.e. you could take in $10 and redeem it for some physical gold to that value.
Yep.
Until the United States had so much debt that people couldn't do that anymore. And France sent some warships to New York to demand their gold back. Right. So that was when fiat currency wasn't created but was unanimously adopted amongst the world governments. And that allows inflation, i.e. inflation isn't technically the creation of money, and CPI, as we see it, is just how you measure the effect of that creation of money. So as the money supply increases, that's actually done by commercial banks. So they print money into existence. So it didn't exist before. They loan someone some money and they create it out of nothing, which is kind of illogical. But that's the way it's worked till about 2008. And it kind of worked because everyone wants there to be more money in the system, because if you actually adopted a Bitcoin system where it's fixed amount of money in the world, it's kind of, we all want to do better at the same time, don't we? So it's kind of, I wouldn't say communist, but slightly not what we actually need or want
for sure.
to
have. Essentially, like crypto in general, specifically Bitcoin, because 2008 Bitcoin was founded. Was it 2008 or? Yeah,
2009. Yeah,
2009. It was founded because the US economy was collapsing at that time, and that we needed to seek an alternative.
Yeah, and the answer to companies collapsing was to print more money, which, if you print lots and lots of it, no one wins. So what's like in the German economy between World War I and World War II, let's say, to keep it easy, you could buy a coffee for 1 Deutschmark on day one, but in year 10, you'd need 10 trillion Deutschmarks to buy a cup of coffee, and it will double by the time you finish your coffee. So unusable.
Yep.
And so as we created more money in the fractional reserve system via banks, at 2001, after the dot-com crisis, and then 2008-9 during the great financial crisis, banks were printing money like crazy. And then COVID came along, and that printing money like crazy seems like nothing compared to what they're still doing right here, right now.
Yeah.
In which case, if you look at gold, the price that's gone up considerably, it's gone up because the value of your US dollar or your Australian dollar has gone down significantly in the last year alone. So your purchasing power of your currency is collapsing.
Yeah, I'm seeing that now, man. It's crazy. Do you think, as a result of that, these digital currencies have a lot more of a envision and more of an outlook with the result of the currency system collapsing?
In theory, yes, in that governments create money and it's very opaque to the people what they're doing.
Yeah.
If you have a blockchain where everyone can log on and see how much is in the system and who's got what, but not naming who owns, who's the beneficiary of account, but seeing, what accounts own what, then at least it's transparent to you. And as you run your monetary system via a program or code, it's the code that controls how many tokens are created, not whoever's in government that has spent all of their money and needs some more. So in theory, your question is totally correct.
Yeah, that makes sense. Why do some people seem to see crypto as a revolutionized digital asset, while some people seem to be very skeptical or oh, cash is king. Like, that's a saying thrown around so much these days. Why do you think there's that big proportional difference between the people who are for it and against it?
So the people that are for it are initially libertarians.
What does that mean?
Someone that likes to preserve freedom of speech, freedom of your money. Why can't we have our own money? You let us go to the casino and buy some chips or collect football cards or whatever it is. Why can't we have some money that is effectively a way of managing the barter system or the barter economy that we have? And so those are the people that started it in the 1990s, although the private money has been started many times before, back to the 1700s.
Wow.
So who likes cryptocurrencies now? Well, quite a lot of people, because it's transparent, it's easily tradable, easily storable, you can manage it on your phone, it's native for young people. The people that don't like it are the ones that benefit from the old system, and the old system is run by intermediaries, so that every time your Australian dollars goes to purchase something, it goes through a number of people who take a slice of the money.
Yeah, especially with those, like, when you obviously pay for your coffee and there's like, oh, what surcharge, like all these added costs just because you're using the right currency, you know. It's definitely changing like worlds very quickly, man.
That's right. So what the internet has done, which was the big changer, has suddenly made everything visible to everyone if we have the right technology to do that. And currently we do, because if there's something worth investing in the technology, it's money, because unfortunately money is interlinked with everything we do.
What are some of the biggest risks you see or challenges you see being associated with transitioning into this crypto digital asset space? Because like you hear all the time, like, oh, Bitcoin dropped 10% overnight, or Trump's elected, it skyrocketed. Like, I think that has a fair bit on the people's uncertainty about it. Why do you think that's the case? So
I don't think that's anything particularly to do with cryptocurrencies. That's to do with money and the value of assets and the ease at which information can be obtained and disinformation can be obtained now. So all of what you said is what we do in financial markets every day of the week. It's just different in that the assets we're trading are less volatile, so we can adjust our discipline to manage that. All I would say to people getting into trading crypto or investing in crypto is what we believe in the financial markets is that the price is irrelevant. It's the timing that matters. So we used to say that you could jump on any chair in the dealing room and start trading something, and you don't even need to know what it is, because you're seeing all the flows coming down, you're adjusting your position, a bit like a bookmaker. You don't really need to know what it is. We didn't really even look at the financial indicators and stuff like that because we were too busy managing the flows, being a market maker. So there's all of this disinformation, whether it's true or not, out there. But really, when you're investing, it's all about the timing, because you want to invest when it's going to go up, not that the price is X or Y, because it really doesn't matter what the price is. At the moment, does it matter whether Bitcoin is 80,000 or 90,000? Only if you bought it at 90,000, it went down to 80,000, because I expect it to be, not me, the person doing this expects it to be 180,000 by January or something. So does it really matter? What it really matters is that you have a nice ride with it, so you buy it when it's going up. And you don't get pushed out when it's going down, and then it goes straight to 180,000. So,
do you see that as a gamble?
No, not at all.
What's the difference?
If you go and put your money on a horse race, normally most people go, here's a race, I'm going to bet on a horse, right? You don't know anything about it. You might study some form and all this stuff, right? When you're investing, you are looking at probabilities of outcome. So you don't have to invest in the best stock to get a great return. So maybe you're looking at dividends or what its PE ratio, whatever it is you're evaluating it, you need to have a result within your own scenario. It's not a yes, no that us traders love to be in the place of. It's what is the best for me in my time, gather with the constraints that I have and what am I trying to achieve with it. So it is probability based.
Do you find that there's a lot of misconceptions out there still to this date with it being, crypto is just a gamble, it like fluctuates so much, the intrinsic value isn't yet set, like so many uncertainties. Do you see that in the work you do still?
Well, it's funny. Intrinsic value is something that old people throw at new ideas. What is the intrinsic value of Bitcoin? Well, zero, because there's no cash flows associated with it until you sell it, right? And then it's got great intrinsic value because you've made a lot of money out of it.
Yeah.
You could say that about gold, right? There's no cash flows from it, right? Can you lend gold out? Yes. Can you lend Bitcoin out? Recently you can. So maybe it's getting there. But really, it's a nonsense because you know the risk you're taking and you've evaluated the risk you're taking. If you wanted a cash flow out of your investment, you might buy some bank stocks, which always pay dividends. And no matter what the price is, you know you're going to get 5% or whatever the number is return every year. And that might be exactly what you want for your financial situation. If you want to put in a small amount of money on the basis that you might make 100x, then you might look at some cryptocurrencies as the technology goes along the adoption curve. So you're not really saying, is Dogecoin better than Shiba Inu coin or whatever it is? What we're saying is how many people are actually going to use those individual cryptocurrencies, and is it actually going to be used for anything ever?
Yeah, I think most people know what Bitcoin, Ethereum is, maybe, but there's a lot of Bitcoin or cryptocurrencies out there. Cryptocurrency is like the umbrella and all the different digital assets underneath that, right? Is that the way it's set up?
How many cryptocurrencies do you think there are?
I would say a good couple of thousand.
I read this week 135,000.
135,000.
Yeah.
Wow.
So currently, how many use cases are there? Well, Bitcoin, Ethereum, Solana, some other things, like 10 maybe doing things. But really, no one has brought out a cryptocurrency that is achieving anything other than a store of value like Bitcoin. So if the idea is you drive your Tesla up to the charging machine and exchange some tokens for your electricity there and then on the fly while it's doing it, then that's a great use case. But we're all dreaming of that use case, but it hasn't got there yet, and we don't know which coin is going to do it. So the adoption curve for different things is different for what they are. And you've got 135,000 fighting to be that Tesla, outcome, and you've got Bitcoin.
Yeah, I think recently Elon Musk does accept Bitcoin payments for Tesla, and as a result, that's reflected in the value of the coin.
Not really.
Not really?
Apart from the fact he might be a big buyer or a big seller if he sells it. So he bought some in, I think it's 2022 or something, when in Tesla Europe, when yields on 10-year government bonds were negative, i.e. you had to pay someone to own some bonds. And he said, well, this is completely ridiculous. I'll just buy some Bitcoin. And kind of luckily it went up a lot. So that's kind of an investment in that he can't find anything better to invest in at the time.
Yeah, exactly.
So it's kind of part of the store of value story.
Yeah, I guess with the whole traditional currency system, we're talking about crypto now. To me, looking in, it seems like it's more risky holding onto your cash underneath your bed with the government printing it non-stop than having that crypto. Like, just looking in, it seems to have a bit more potential.
Well, you have to realise that governments are going to keep printing money because they're all in debt. Western governments anyway.
But that
Even
would
in
just
Australia,
decrease the value of the dollar, wouldn't it?
of your dollar, yes, absolutely, because it's more money chasing the same goods or services. So, and as you know, like supposedly inflation here in Australia is 3% or something, but as you said earlier, everything goes up all the time, doesn't it?
Yeah.
Every time people can put it up $1, a cup of coffee, butter, whatever it is, right? They do. So real inflation probably is three times that, four times that. But government likes to measure it in ways that keep people happy.
Even since COVID, like that, like we're still suffering like the inflation consequences of obviously the printing of money being so rapid through that period.
That's right. So in America, in the last 10 years, 40% of all the US dollars in circulation has been created.
Wow.
So if you said, well, let's say it's 50% to make it easy. If you said house prices had doubled in America, you go, holy hell, how did that happen? Well, because you got twice as much money chasing the same number of houses. It's really simple when you think about it. But we only measure it by houses which are very individual, in postcodes that are very individual and they change. So it's a very difficult thing to measure. But if you look at the money supply, it tells you exactly what's happened. And if you look at house prices, price of, what's another good thing to measure? Cars, stuff. Stock market, for example, as a function of the amount of money in the system, it's a horizontal line rather than always going up because the denominator is getting absolutely killed. And in the last 100 years, since 1930, the value of the pound is less than 1%. Its purchasing power in the last 100 years.
That's crazy.
So all the fiat currencies have virtually gone to zero already.
That's unreal, eh? So obviously we're talking, knowing what crypto is now, it's the digital asset that's unregulated off the traditional currency system. So I think it's good to distinguish. There's no middleman in that, eh?
Well, there can be if you buy it through a broker or an exchange, but you can send your Bitcoin to me. Thank you very much. I'll give you the address later, without anybody being involved. And what you own and custody yourself as a bearer instrument, i.e., you have it, therefore it's yours, can go to me, and I have it because it's mine, without anybody being in the middle. And you quite often see tweets where someone has spotted on the blockchain, someone sent, $10 billion worth of US for a fee of $6. Trust me, in the traditional banking system, that's a very, very complicated transaction.
Yeah, especially like getting cash. Like it's such a mission to get cash out these days. There's so many limits. Like you're restricted. You have no control over how much cash you can get out.
Well, the reason why that is, it's not your money. If you put $10 into your bank account, it's not your money anymore. It's the bank's money. Because when you open an account, you sign off, possibly not reading all the details like everyone else, that you give the bank $10, it gives you an IOU for $10. So it's not your money anymore.
That's so scary. Yeah.
And all of the talk of recently about bail-ins, that Australia passed a law about bail-ins and how banks can execute bail-ins. All of it has already been done already because it's not your money.
What's bail-ins?
So you can have when a bank collapses, you can have a bailout or a bail-in. A bailout is where some external capital has to come in to make everything whole, i.e. to pay off all the debts and to reboot the bank. A bail-in is where the bank says, all the money that everyone has in deposit with my bank is mine and I'm keeping it.
They just make that decision on the spot.
Well, it's already affected by the fact that it's effectively there because it's not your money anyway. It's the bank's money. And the legislation is how banks could actually legally enable that to happen as a banking group as a whole.
Right. Okay. So let's break down the backbone of crypto. It's very complex with my understanding with the whole blockchain technology. What is blockchain technology and how and why is that important with crypto?
It's a digital ledger, which doesn't sound very complicated, but its security features and transparency features are the antithesis of the traditional banking system. You can go onto the Bitcoin blockchain and you can look at every single transaction that happens. Read only. Obviously, you can't change them because you don't have the keys to do that. And you can look at how everything is moving and shaking, what's in a block that's been put together to be made sure that everything is right. And it is really actually simple. It's just a ledger.
Okay.
Digital, secure, transparent ledger.
Where everyone can see purchases, but with obviously identity protection, is that incorporated in that, or can you see all information in the transaction?
You can see all of the information apart from who is the beneficial owner of that account. I.e., you might be account 1, 2, 3, 4, 5, but no one knows it's you.
I guess that taps into the blockchain security, but the transparency through the transaction is the fact that everyone can see where it's going. Therefore, that's a security mechanism.
Yes, that's a feature.
So then, beyond crypto, is blockchain renowned for incorporating itself in other businesses and technologies? Like, is that becoming more of a enhanced feature in today's world?
Yes. So if you wanted to go and buy a high-end handbag, let's just suppose, you would go to that high-end manufacturer and they would scan the code on your handbag into the blockchain, which would tell you the provenance of the leather or gold or whatever's on it. And it would tell you all the owners, and it would tell you anything else that manufacturer might want to put on that blockchain. You can use the blockchain, or IBM uses the blockchain a lot around container shipping, so that if you've got a monitor that's come from South Korea on a boat, you know exactly where it is every time it's scanned, and you know whose hands it's passed through, and all the other stuff that goes on. And you can say, yes, we have all of that stuff when, your courier delivers stuff. But this is end to end, and it's about ownership rather about who is managing it at the time.
Right, so it's been around for years.
Well, the Bitcoin blockchain started in 2009, didn't it? And then people started using blockchains in 2018, I suppose, for different purposes other than specifically around money.
Yeah, right. Okay. So with all that being said, do you think crypto, in your view looking in, we've touched on this briefly before, but do you think it's the way of the future looking in? As
ever, it depends what happens, doesn't it?
Yeah.
Who determines the future? Well, who knows the answer to that question? If the future is kind of like what it is now and we have a free world that we live in, I'm sure that it is going to be ingrained everywhere in everything that we do. If you look at the pure efficiencies that blockchain can produce. So currently, all settlements in foreign exchange takes 2 days because computer systems have to offset amounts with different banks, and settlement has to happen and all this stuff. Lots of people get involved in it. With the blockchain just does it instantly. You don't need to, you just need a report. Equally, houses, just think how messy buying and selling a house is. You can do it instantly on the blockchain because the blockchain allows you to cut up a house into many bricks, let's call it. You can fractionalize it. So when does that become part of what's actually achieved is a different question. And there are fractional ownership of houses and cars, and there's always been fractional ownership of racehorses, right? I owned one leg of a racehorse many years ago, but we didn't have to put it on the blockchain, right? Because we were mates. So it's just highly efficient, and the story of adoption of the currencies is partly the adoption of the blockchain as the solution for a very messy, human-intensive world.
Yeah, that's a very good point. So breaking down the pros and cons of the crypto market that is available right now, obviously the efficiency and no third party unless you obviously buy and sell through a third party platform. What other considerations should we consider with viewing the crypto space?
So just to talk about exchanges that you just mentioned. So if you leave your crypto on the exchange, it's still yours, but you have counterparty risk with that exchange, so that exchange should go bust. But it's still yours. Yeah. In terms of how does it get into everyday life, it's a very slow thing. Currently in the US, they're trying to adopt Bitcoin at a very large scale. Why they're doing it, we don't know. Possibly because they're so broke they can't get out of it. Do we want them to adopt that? I doubt it, because government should keep out of money. That's why it's always been gold and silver.
Yeah.
And now we've got Bitcoin, so we don't need any fiat currencies.
I think it was Rich Dad Poor Dad. I was reading his book that with the history of currency is so interesting. And it was, what year was the gold stamp taken off the dollar?
1971.
1971, off the top of the head. It was at that
August,
moment
August
then.
1971. I can get
August 1971. It was that date then it started to change, or did it start to change before that?
It's always been changing, and it's always been messy because governments or maharajas or little kingdoms or whatever always trying to create their own money. For example, the story of the United States at the moment is following the fall of Rome between BC 80 and AD 450 or something like that, in that the Romans had silver coins, and when they didn't have any money and they couldn't borrow any more, what they'd do, they'd slice slivers off the silver coins and make new silver coins with them until there was hardly any silver left, and then they started faking silver coins. So if you read Robert Kiyosaki, like you were just saying, this story has been going on forever. Governments ran out of money because all they know how to do well is spend money. So they have to invent it, and unfortunately the taxpayers are always the one that has to pay the bills for it.
Wow, that's crazy, man. I got a couple last questions for you, Ian. If you could go back to your younger self with the knowledge and wisdom you have now, what would you tell yourself and why?
I think that the two biggest drivers of making money or saving money or keeping money are persistence and timing. And you could say that about pretty much everything you do. When you're young, and I was very lucky to go big very young, you think you can do anything. You think you're going to rule the world forever, but you're not. And it's a massive come down when you find you can't. And you learn that your friends that haven't been kind of like as famous, or like traders in the 1990s in England were rock stars. You can only be a rock star for a certain amount of time. Even rock stars are only rock stars for a certain amount of time, right?
Yeah.
But the guys that end up with the massive houses and the stuff like that are the ones that are persistent and suck it up when things go wrong. And that's a great thing. And when you're the rock star, you don't have that. But you should always do something you're passionate about, simply because you will be able to put all of your time into it to follow that. So if you can mix in passion with persistence and timing, because what you do is all dependent on timing, whatever it is in your life, I would say those are the three great things. And don't be fooled into thinking you're passionate about something you're just interested in.
How did you come up or discover your passion for finance?
Purely by luck, in that I got thrown into that dealing room in 1988 when I knew absolutely nothing about it. I know exactly the exact moment it was, because there were like 200 guys there yelling and shouting, and they said, go and stand next to that screen, and if something comes up as a headline that says the Fed, I want you to yell it so we can all hear it. So I walked over with this other guy, and we looked at it, no idea what it is. And the other guy said, look, it says Fed there. So I yelled Fed at the top of my voice, and the place went absolutely nuts. And afterwards, 200 guys and us two went to the pub forever, because we made them a lot of money, because information is everything. And just the whole thing was fantastic.
Wow.
Yeah.
So that was... I haven't seen Wolf of Wall Street, but I'm envisioning it kind of being like that, with papers flying everywhere, like chaos.
Well, Wall Street is doing deals. London is about liquidity in marketplaces.
What's liquidity?
So if you need to sell $1 billion of a currency, then you can't go to your bank and do it. You have to find a wholesale market maker who will buy that $1 million off you and distribute it across other players in the marketplace.
Okay.
So we have to distribute whatever it is we're making a market in, and that's our job. Our job is not to make money. Our job is to make that price 24/7. In a way, it's the same in that it's high pressure environment. You're in a room full of screens. There's lots of, and you can read the books, girls, drugs, alcohol and whatever, because it's that high pressure thing. And back in 1990s, when everyone was honest, everybody won. That was the great thing. You do this really crazy job and everyone was making money. The moment people started cheating the system is where everything went wrong.
What do you mean by cheating the system?
Well, there's a famous example where Barings Bank, which was a very old English bank, was taken down by one of the back office guys who was forging documents and stuff like that. And he was trying to play the difference in the price of yen in one jurisdiction to the other, thinking you could arbitrage it, which means making the difference, that small amount of difference in the price, but he didn't know what he was doing. And he ended up taking the whole bank down. His name was Nick Leeson. He's very famous now and lives off those incidents. But the moment, and this is a good analogy here, the moment that the cheaters could get in, because we were all honest, our word was our bond, is what we said. And you'd go to a pub in London and this bloke would have this bag of bearer documents worth £5 million and he'd get pissed and leave it at the bar. And then you go to the bar and you say, look, this guy's left it. And he goes, oh, he does it every week, but there's $5 million of bearer bonds that people could have. Our word was our bond. The moment the cheats got in, because they realised an enormous amount of money went through very little people, was the moment that things went wrong. But now the blockchain is recreating that, where what you do is what you say and is actually enforced to be legitimate, and everyone can see what you've done. And that's a great thing.
That's a very good point. And the pivotal moment you feel with the whole system is when the cheaters got in, that's when it started to collapse.
Well, no longer could banks trust their staff. And right. So I guess the early 2000s was when that started, because I was definitely in Australia by then. It was so easy if you were a cheat to get away with it, because quite often all of the traders in the market would meet in the pub and the back office girls would come in and say, well, who's done this deal? We've got no idea. And we say, well, I thought he did it. And one of us has to own up to it because it's been done. And if I lose money today, Fred will lose money tomorrow because we've done it. But we're all honest in that we all needed each other for liquidity purposes, because otherwise we all die.
Yeah. And
that was what it's about, creating a market out of nothing, not about making money.
For sure. Do you feel that the blockchain technology that crypto sits on, cheaters can't interfere with that process?
Well, certainly it hasn't been, Bitcoin specifically hasn't been hacked in, 15 years, let's say, 16 years. And it has currently, 1.3 trillion US dollars sitting in there and hasn't been hacked. So wow. It's a pretty clear and obvious target, right?
Yeah.
Does that mean it can't be hacked in the future? Who knows? Who knows with quantum computing? Certainly, that blockchain that was hacked the other day was for $1.4 billion, was it? But the point is that even though the thieves got away with it, they couldn't, I believe, do anything with it, because the authorities can track your account with it, because you see it coming on there when it's been hacked. And if the whole marketplace says, we're not going to allow you to cash in your chips here, they're stuck, right? So effectively, it's gone out of the system and it's been burnt. So with greater understanding, there will be no point in hacking it because you can't get away with the money.
Yeah, because everything's documented, like you were saying, like every transaction, like people
and
can
instant.
see. Yeah.
And 100% instant. So if the authorities in the world, and this is, the Bitcoiners won't like this, if the authorities in the world wanted to monitor every Bitcoin to see what's happening, then they could absolutely shut down any thievery, for sure. But then the thieves go other places, don't they? And they build things on top of it, which...
Yeah, the fact that there's 103,000, 130,000 crypto?
I said 135,000.
135.
Yeah.
The fact that there's that many out there, and everything's documented, it seems to me that it's looking in, seems pretty secure.
I think if you keep it on, if you put your money into one blockchain and you take it out of one blockchain, it's infinitely more secure than if you put it into one blockchain and take it out of another blockchain, because someone's had to write the bridge code, and who are we to understand or interpret whether that code's any good? At least
what's the bridge code? Is that like the code to connect buyer to seller?
No, it's to connect a blockchain to another blockchain.
Okay.
So we know that there's lots of inspection of each blockchain's code, because that's what all of the verification has to manage every day. But you can have a purpose. You can have a shipping container from Korea wanting to exchange some tokens for your, for your rechargeable Tesla in Chicago, right? And how those two things come together has got to be some code. And is that code secure and can't be hacked? Well, there's a lot, because these are both open source, anyone can write the code. Point being, if you put your money into one blockchain and take it out again, infinitely more safe than trying to transact across blockchains.
I think with the whole scamming rate on the crypto blockchain compared to the traditional currencies, there's scams happening every day with traditional currencies, but you don't hear as much on the crypto blockchain, which I think is a green flag for future visions. Yeah,
so all I'd say to that is I think there's far less scams that get away with it in crypto, but when they do, it's for a lot of money.
Yeah, for sure. Well, thank you so much, Ian, for this conversation. It's such a big topic, like you were saying, and I'm sure there's going to be so much questions, and it'd be awesome to connect again and see what other topics we can tap into. For the audience that are intrigued on your work and what you actually do, tell us a bit about where the audience can connect with you, because I've seen that you have the Limit Up newsletter. Do you mind telling us a bit about that?
Yeah, so it's a newsletter about financial markets, not specifically about crypto. Bitcoin is always top because it's kind of like the one moving most or has quite a lot of press. So it's across all financial markets. It comes out every day and at the weekend, which is a different perspective, i.e. more country and more long-term perspective rather than what's happened the previous day. There's a website, sabria.capital, where there's a number of topics that will be coming on in the near future, including Bitcoin for Business and all sorts of other stuff as well. And it's at Suberia, SUBERIA.capital. I'm sure you're going to put it in the notes beneath this. And yeah, so pretty much under the radar at the moment. But as we were saying earlier on, I'm here to help people understand the big changes that are just about to happen.
Yeah, awesome. And as you were saying, all links to the resources in the show notes below. Thank you so much, Ian, for this conversation. I really appreciate your time.
My pleasure. Thank you.
That wraps up another insightful episode on the Growth Concept Podcast. Thank you for tuning in, and thank you, Ian, for your insights and taking us on a journey through the world of Bitcoin, finance, and crypto, as well as the blockchain, shedding light on these challenges, opportunities, and their future. If you've gained value from this conversation, I challenge you to subscribe to the Growth Concept Podcast for more episodes on innovation, personal growth, and strategies for your progress. I'd love to hear your thoughts on how this episode went as well. Leave a review and let me know. It helps me improve this show every single day, and it helps us reach new audiences and guests. All of Ian's resources are linked in the show notes below. Until next time, thank you so much for tuning in. Your support means the absolute world to me, and I look forward to seeing you on this next episode.